Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we got to talk about spend $40,000 and receive $1,000 per month in dividends. We have a lot to talk about, especially since the stock market has been booming over the last 3-4 years, all-time record highs. Are you taking your profit like you should? And dividends going forward. Come along and let's talk. And welcome. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. I want to thank you so much for being here. Once again, please share the videos because you never know who's out here trying to find information, who you can help. There's a lot of hardworking people, and the fact that it's going to cost you more in the future, as always, you need to prepare for things costing 10, 20, 30, 40, 50% more in the matter of a few short years. Now, let's get into it, shall we? Real fast. We won't go to the Stop Struggling Now YouTube podcast page. I'm going to get right into it. So, here we are, as you can see, with this article on Benzinga. I'll have a link down below in the description box. And notice it says dividend investor making $1,000 per month with just 40,000 invested shares. His hyper dividend portfolio, top 9 stocks and ETFs. And I'm like, oh my God, this goes along with what we talk about during our live streams and other videos that I've mentioned and made before. But let's get into it. This is going to be short. This will be sweet, but make sure you have your pen, pads, and papers ready. Even you who are on the podcast, make sure that some way, somehow, you can write down some stock symbols. Now, today looks like another good day on the stock market, but let's get into it, shall we? Now, I'll have a link down below so you guys can come here and check it out yourself. About 2 months ago, a dividend investor shared his portfolio and income report on Reddit, of all places, a discussion board for dividend investors on Reddit. The investor said he collected about 1,000 monthly with 40,000 invested. Now, I don't know about you, but I'm thinking that's $12,000 a year. That's 30%. Where can he get 30% returns every year from? And in fact, they mention it here, giving the portfolio an insane yield of about 34%. Now, anybody here want to guess how he's getting 34%? Remember during our live streams, and I made videos and podcasts about this before, something called Yield Max ETFs, high risk, high rewards. But do you want to put all your eggs in one basket? That is the million-dollar question. To get your 34% return, that means you have to give up something, and that usually means your stock price goes down when there's a higher return rate or yield. Let's get into it. Gave you a little clue. So, I created a hyper dividend portfolio last month and collected 1K last month. Goal is to reach 2.5K a month by next August, the investor said. Well, if he reinvests, then he should be able to. Now, as expected, most of the holdings in the portfolio are risky, high-yield options ETFs. When asked whether he's aware of the risk of losses in principal That's what I was referring to. Let's just say I bought $40,000 worth of stock and they're telling me I'm getting 50% return. Well, what'll start happening is the stock price may come down to give me that. So it's a fine line between how much you're really making, which is the principal, and how much you're not. And that come with investing in such kinds of ETFs. The investor said, yes, I know. These are called synthetic ETFs. Don't care how they pay it as long as principal plus interest less principal plus interest equals final value. That's the question that you need to pay attention to as an investor. Let's look at some of the biggest holdings, an extremely high yield dividend portfolio. Now, I call cap on a lot of this because starting off, MSTY is a yield max. Well, they say it right here, the yield max MSTR option income strategy ETF. Yes, this will be high. All right. The distribution rate is 75%. That is different than a yield rate. They are distributing 75% of the profit. This right here does not have any business backed by anything. It's basically the ETF itself based on options trading for MSTY. Puts, calls, and then they have some other things that you need to go study. They have treasuries, but treasuries will only get you 2 or 3% a year. So again, the stock price will take a hit and start coming down in most instances year over year. So you'll lose that principal, but you'll gain in the dividend. That's why that's very interesting. The SVOL. And now, how many of these shares can you have? To simplify, volatility premium ETF, SVOL. Now again, notice there's no mentioning, but now he starts saying how many shares he owns. So you can start figuring out, well, if he bought 200 shares last August, now you can go back and check on how much he's actually lost or made. But I won't do that. This isn't that video. So I'm giving you what some of these shares are that he has purchased. He must not be in the United States, or maybe he is. He's got FLRT. I thought that was FILRT because that was in the Philippines. This is FLRT, Pacific Asset Floating Rate, high income. Again, don't go anywhere. I'm going to actually show you some other shares that are high dividend yields, but you don't have to go out on a huge limb and lose the value of your stock price. Just keep that in mind. Like this one here at 8%, a far cry from 34%, but he bought 200 shares. Here's JP Morgan, JEPI and JEPQ. We talk about this. These are roughly 9%. So again, he bought 9%, 8%. We don't know how many shares because he doesn't share all of the shares. So we can't really duplicate, but you can go check. Now you see TT, SO, PGR. All right, I'll repeat. JEPI, JEPQ. T as in Tom, T as in Tom, TT, SO, P as in Paul, G as in George, R. That's a PGR. All these, I doubt, are over 10%. That's why it's very interesting. There's no amount of stocks listed. Now we go up to what I'm referring to as the YieldMax AMZN. This is Amazon Option Income Strategy ETF, AMZY. Again, notice the fund has a distribution rate of 41%, but notice they said AMZY is down 9% so far this year, and he admits he has owned and bought 100 AEMZY shares. So again, you can almost track this to find out the appreciation and everything. Here we are again. He has YieldMax TSLY Option Income Strategy ETF. And again, with a distribution rate of over 120%, TSLY generates income by selling call options on Tesla shares. This is what I was referring to. Plus, they do much more. This is why you have to go study. I'll have a link down below for YieldMaxETFs.com. All right, and this article. Over the past year, TSLY has been down about 55%. This is what I'm referring to. This is why you have to study. So if you're down 55% in your share price, how much are you really making if it takes you 100% in distributions? That is why you have to pay attention. So that's what the YieldMax ETFs. Now, O itself, again, 100 shares of O, which is Realty Income. Again, we're talking about 3-4% return. So minor. JP Morgan, NASDAQ. This is the JEPQ. Again, this gives out about 9.4, and they are actually saying it. As of October 14th, the ETF yields about 9.4%. It's 9% for roughly JEPQ and JEPI, but these are around $50 per share. So if you buy 100 shares, that's $5,000. If you have both of these, that's $10,000. And then if you bought these other ones, like 100 shares of all these, that's easily another $20,000. So this is why I'm calling cap on this 41 or whatever he's saying, $1,000 per monthly, because what he's buying, he's spending thousands of dollars, and we can already account for about 20 to 30,000 of it. So I'm like, well, it's only a $40,000 portfolio. So this is very, very interesting. So we also have NVIDIA. The YieldMax NVIDIA Option Income Strategy ETF. And again, don't go anywhere. I got some more stocks for you that are not 50%, 60%, 75%, 120% distribution. We're going to be talking about 13, 14, 15, 16%. That's right. Real estate investment trust that are not high risk, high rewards. And I think a lot of people would love to have 15, 16, 17% average for their return on investment. All right. Now, NVDY suits investors because it believes NVIDIA's long-term potential. But again, it only does its options income. It does not buy the shares of stock. All right. Now, that's the almost end of this. Nothing more to discuss on this subject matter, but I just want to let you guys know about that. Now, I am actually going to go down this list so you can understand. Look at this. This distribution rate is 68.13 at YieldMax ETFs. You'll have to come over here and study. YieldMax ETFs, or YMAX, gives you a dividend every Friday. YMAG, 14.9, which is more reasonable based on the Magnificent Seven, which are Apple, Amazon, Facebook, Google, Microsoft, NVIDIA, and Tesla. All right, that's the Magnificent Seven. So if you want a lower distribution rate and have something to do with the Magnificent Seven, that is fine. Now, here is TSLA right now is 108% distribution, but again, it lost 55% of its stock value last year over year. That's what you're risking when you're dealing with YieldMax ETFs. Now, let's get into ORC, Orchard Island Capital. Can you believe this? 18.45%, ladies and gentlemen, right now. Real estate investment trust. What do you think is going to happen with real estate over the next 3 years as the interest rate, the Federal Reserve's interest rate, comes down over the next 2 years? I think what usually happens, a price increase. Now, let's keep moving along with whatever else we have to talk about, but I thought we might as well start off with a bang. And notice the stock price is $7.80. That is a good sign. Notice I'm only sitting here on the screen for 1 day. Let's go see what's happened year over year wise. Oh, 31% appreciation in the stock price. So if you would have spent 700, well, it wasn't 700 back in the day, but if you would have spent $600 for 100 shares, your 100 shares not only would be up to 780, but during the course of that time, you would have leveled up because your yield values have increased, is the beautiful thing. Up to 18. So any reinvestments is at 18.45% right now. So you guys can do the math. I know there's a lot of smart people watching this who's out there that can actually go back and figure out, wait a minute, I have appreciation plus the 18% return on my dividends or more because I bought at a lower price. Haha, think about that. If you're getting at $7.80 at 18.45% dividend rate, what happens if you would have bought the stock at $5.95? Yes, it would be in the 20 plus percentile range, ladies and gentlemen. Go do the math. All right, let's keep it moving. PSEC. This is what people have learned over the last 2-3 years about all of this that I'm about to share with you. Here's a 13.52% from Prospect Capital with a $5.32 share price. Who doesn't like 13.52%? ARR, $19 share price for ARR at 15.09% yield at the moment. Who doesn't like that? Anybody? In fact, I'll do this too, just so everybody can see. Look, 40% over the past year for stock appreciation for the Real Estate Investment Trust. That's right, you guys were already far ahead. Here we are again. AGNC, another one at $9.65 share price, 14.91% yield, for almost a 15% yield. And yes, we'll do it again just so everybody can see. 38.9% stock price increase, which means your yield is higher because last year it was $7 and now it's $9. 38%. 0.9, almost a 40% annual increase on your share price, plus your yield is 14%. Somebody out there's a mathematician. Let me know what that actual real yield is. All right, now we go to NLY. It's at 13.55%, and the stock price is $19.17 as of today, October 28th. This does not mean you can't get in now, but I'm thinking when you start adding all these yields together, even if you decide to do more than one or just one, I think you'll like this 14, 15, 16% annual rate of return that you could receive as long as these guys are in business paying out the same amount of shares for the money you put in today. Because remember, if the stock price goes higher, the yield goes down. If the stock price goes lower, the yield goes back up. So just keep that in mind. Here we are again with Two Harbors Investment. It's 2 TWO is the stock symbol. Very easy. $12.85, and it gives a 13.99% yield rate of return. Anybody have any questions? Make comments down below. I think this helps out a lot of people who do not have to spend hundreds of thousands of dollars to get their high yield income back. But it's better if you have more disposable income that you can put towards this, because again, I never understood why a sports star would lose their money, because they could, when they get their first check, they could easily say, hey, let me go down here and get myself a couple of $100,000 worth of dividend stocks. And so that way you can always add to it later. But the point is, you know, you're going to have a couple of $1,000 a month coming in, or a nest egg waiting for you after your playing career without doing anything. You can spend all of your checks from that point on if you're getting 15%, 12% annually every year. So all I'm saying is that is the thing that we need people to get. More important is literacy with finances, because there's no reason to go out here and waste all the money. Now, I have Dynex Capital, which is DX. It's simply DX. And it's $12.37. And the dividend is 12.65%. Again, your opportunity is here, ladies and gentlemen. Just keep that in mind. And all I can tell you is this: make sure you use the apps down below. If you've never downloaded stocks, Robinhood and Webull apps are down below. You get free shares of stocks, so make sure you use that. Get those. The articles or the article will be down below in the description box as well, or on the podcast page, or on any other pages that we have. Make sure you sign up for our social media. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, and it's only going to get harder. I made the prediction 5 years ago that the middle class is going to be wiped out in 5 years. 70% of the population is living paycheck to paycheck, but during the course of the month, it goes up to 78% because most people get paid every other week. And so therefore, 1 week you pay a lot. Then the next week, which is 2 weeks later, now all of a sudden you have to use some of that money to catch up on some of the other bills. So now you're, after that point, out of money. So that's why it rises to 78% during the month. That is scary. In the next 3 years or 2.5 years, the upper middle class is going to be wiped out. Those of you who are comfortable living, working 2 jobs possibly, or husband and wife, boyfriend, girlfriend, significant others, whatever the case may be, living paycheck to paycheck, it's not going to get any better. So any disposable income that you have right now, you're going to have to put it into a vehicle that generates money for you. So hopefully these dividend stocks that I provided and showed you today helps you out. And with all that said, be safe out here and keep your head up. Keep moving. And I'm out.